So type 1 trades, for anyone who's not familiar, type 1 trades are, let's see, I'm going to use this one as the example. So type 1 trades are a bounce off of VWAP or a retest of VWAP coming from other direction. So in this situation, this would be a type 1 short opportunity. We're coming from above right here and down. That's a type 1 long opportunity. I know we're kind of revisiting the primary trade types, but this is going to be recorded for everyone to watch in the future. So just make sure we get comfortable with that. So the reason that I compiled this example is because I think this is ES from September 6th, so just about 2 weeks ago. In my opinion, this is an example of, I guess, what I could kind of consider the give and take of type 1 trades. So type 1 trades work on kind of different levels. You can kind of use them as a way to participate in hopefully a bigger trend, but you can also use them as a scalping tool to some extent, right? Even if we are in a bit of a counter trend environment, like on this example right here, Fastlane moved down right out of the gate. We reclaimed the -1 deviation band, ripped right up into VWAP, and now we just consolidate in this area for the rest of the day. So the first type 1 short to consider is this one right here. So we get this big tick in. And again, this is kind of what I mean. If you are a scalping trader, this trade right here, a big extended move, I would argue, coming off the -1 deviation band, I would always argue you're not always, more than likely, you are going to experience some reaction at this test. The confluence of this is the prior day's VWAP with intraday VWAP, and that's what we got here. This is a 2-minute chart, so you can see we pushed up into it, and we got wicked all the way down. We could have came all the way down within this candle for all we know, but then we found the higher low. We eventually pushed up through. So personally, I'm going to kind of like lead this off by, this is not necessarily a type 1 short that I would personally look for. So a couple of things that would make me hesitate about this kind of setup. We have already made it a clear concerted attempt to push lower. We have expanded price lower. Out of the gate, we rejected the prior day's VWAP and the -1 deviation band. We rejected the -1 deviation band again. If we were going to stay heavy this morning, I think this consolidation would have either retested the -1 and broke lower yet again. It would have flagged out a little bit more subtly, I think, right around the -1 deviation band, maybe in the slow lane. But that's not what happened. We got a break back above the -1, consolidation on top of it, and then a big push up. It's also kind of hard to see here in the background because of the volume, but those are pretty decent volume spikes on the way back up. So for me, to see that trade set up right there, I don't have a lot of faith that after we just meaningfully attempted to explore lower and that move lower was rejected or rebuffed, I guess you would say, because it's technically support down here, we found the higher low, we push back up. I don't have much of an interest in this trade because if I'm looking to take a type 1 short, it's because I think it is the first step in an eventual move really aggressively lower. So I'm looking to get in the type 1 short early enough, maybe take a partial as we come into the -1 deviation band or slightly even before, hold that trade, at least part of that trade, the trailer, looking for the actual breakdown into the fast lane back where we came from. So early on in the day, when we see these extended moves that get quickly snapped back up with big green candles with decent buying pressure, I don't find this to be that appealing of a type 1 short setup. It could certainly still work. You can manage your risk pretty effectively with an entry anywhere really in this candle. You could also have entered in any of these candles. Ideally in this situation with a risk back above prior day's VWAP, because when you use confluence areas like this where there's overlap but not exact overlap, I tend to recommend people use the farther away of the two support or resistance levels. So you wouldn't want to risk like right in this little gap that I'm pointing to between the prior day's VWAP and VWAP, because that's no man's land essentially. If you're getting wicked out there and then we reject the prior day's VWAP as cleanly as we did right here, and then we head off lower, then you're really kicking yourself because you just scaled out of a trade and got, you got beat up on a trade, you lost money when there was actually no point in time in which your thesis was actually invalidated. So just focusing on this trade in particular, either of you have thoughts?
Yeah,
Who wants
James,
to go first?
yeah, James, you want to go first, and then I'll chime in whenever you're done.
Yeah. So a few things. Type 1 trades, right? When I am personally looking for type 1 trades, there's going to be a few things that I'm looking for outside of just a bounce off of VWAP, right? To me, a type 1 is buyers are in control. Well, okay, let's go from a long or a short. Let's talk about long, because we all know that I trade primarily to the long side. So if I'm looking for a T1 long, I want to see on a few different fronts that buyers are in control. For me, that's going to show in the volume first and foremost. I want to see large volume spikes of positive buy delta, right? I want to see in the order flow and the depth of market that we have a good deep bid, meaning that there's not just one or two levels on your level 2 where there's a size sitting there, right? I want to see a good amount of size stacked up. Um, as we come up and over VWAP, I want to see that slope start to aggressively build. And as that slope builds and price comes back in down into VWAP, I want to see that volume start to flood in on the buy side. Personally, I am not a counter trend type 1 trade taker. To me, that type 3 that plays out right there just before 10:30 is my bread and butter. I'll take that tiny flag all day long back to VWAP, and I, it's my favorite trade. I take it multiple times a week. A lot of people would look at that type 3 that happens right there and either A, completely miss it, or B, say, well, there's not enough confirmation there, this or that. But to me, the risk versus either A, low of day, or that prior low before the extension is optimal. You get 2 full standard deviations of movement, and it's, that's my bread and butter. Counter trend wise, though, I personally do not take a ton of type 1s in a counter trend environment. So just quick bullet points. I'm looking for high buy volume on the long side, or on the short side, high sell volume. I'm looking for aggressive slope in either the up or down direction. I'm looking for clean respect of VWAP. I want the whole bodies or the real bodies of the candles to say above or below, if long or short. And I want tick and the order flow to be in my favor. So I want, if I'm looking for a long trade, I want to see positive ticks coming in. That means that the market's tailwind is with me and I'm buying with the broader market, right? And if I'm short, I want to see that tick failing, falling underneath, its average and heading down. So I used to take type 1s all the time. My first most consistent setup, and I've said this to you guys before, there was a couple years ago where the London closed type 1, so it was in 11:30 type 1, and it was the third touch of VWAP on a 1-minute chart. So it ended up being like a 3-minute ABC, basically. This is what I built into my setup then. But that 11:30 type 1 worked for weeks and weeks and weeks and weeks and weeks, and it was just a no-brainer setup. And then one day it just stopped working. So I think that there are certain market environments where type 1 trend setups work much better, right? Right now we're in a bear market. If we had a positive tick and, we were rallying in the broader market, I would be more apt to taking a type 1 trends type setup. Right now in the current market, with a bear market going on, and I'm looking for more volatility type plays, quick, fast plunges down and bounces back up. That opening spill right there, where it just vertically goes down right there, you only get one pop into -1 right there. That low, where you see that basing right there and that immediate break back up, as soon as they take out those sellers at lows, those 2 extension candles to the left just before 10 a.m., you can almost guarantee they'll try the highs of those candles again. It's because there's a gap that happens there and that major extension down, and that's why I like that reversion trade so much. But the T1 here, you notice you have above VWAP, you have those same strong extension candles that are to the buy side, but it's something I talk about all the time. You're seeing a ton of exerted effort above VWAP but they're getting no compensation higher above 39.40, right? There's none. They're not getting there's a wall there on the offer, right? And so when I see that, it kind of immediately shuts me off of the idea of, okay, I'm going to risk VWAP here because they're not getting compensated higher. I would want to see buyers be compensated here and at least a clear hold of or clear attempt to move into the fast lane. And then post the fast lane being attempted, maybe then now the bid has come up a little bit. The bid may be higher than VWAP now, where size has moved to. And now I can start to think about a T1 long style trade. So that's my thoughts on that specific chart.
So here, I'll chime in briefly. Jeff, would you do me a favor? Can you actually draw something on this screen for me if I told you what to draw? Okay,
Yes,
I'll
I
keep it
can.
really simple too. So yeah, you can draw it on a marker.
Actually, that's highlight. Yeah, let's do blue and
Okay.
sure. Okay, yeah, hit me.
Down at the -2 deviation band, and you can do this around 10:30 or 11 o'clock on the chart, kind of where we've been talking about. Down at the -2 deviation band, draw a little X across the -2. Yep, perfect. Okay, at the -1 deviation band, draw the letter A. Cool. At the VWAP,
What's
draw the letter M. At the 1 deviation band, draw the letter P, and then put an X at the 2 dev. All right, this simplistic markup is going to help in the way we kind of discuss this stuff. At the 2 deviation band on either side, I'm not looking for a trade at all. There's no new entry for me. I'm not trying to adjust the trade. I'm letting the trade develop as it expands outward in either direction. What we've drawn here, the A, the M, and the P, are for a long trader specifically. You would invert it, so it would be, PMA in the other direction if you were talking short. And what these stand for are A for an aggressive entry long, M for a medium entry long, and P for a patient entry long. What I'm kind of getting at here is type 1 trades philosophically. I mean, first of all, they're simple to identify. Everyone's experienced them before. They're a clear signal that the market has retreated back to a point of balance, and one side, the buyers in this case, or the sellers, have clearly picked that back up and are resuming the main trend. So the whole idea of a type 1 trade, since it is the kind of medium aggression entry, is, hey, I'm not trying to buy it on a dip. I'm not trying to get it below VWAP on like a super discount. I kind of acknowledge that I need to see the market pick one side, but I do want to be aboard that train. When we talked about James looking for the type 3 trade, so specifically the A, the -1 deviation band, and this would be a type 3 long. It's making a kind of flag around 10:30 a.m. That's an aggressive entry because it is below the VWAP, but it's a great, damn near the bottom if it does turn around and race higher. Hence the designation A for aggressive.
And notice
M,
I have defined risk against that low too. That's what I always reference. Sorry.
yep. Yeah, no, that's a great point. What he's saying there is it's not just blindly like, oh, we're back in the fast, or we're out of the fast lane. We're in the slow lane. Therefore, I'm going to go long. He's saying, well, there's a pretty clear pattern happening using the kind of dynamic support of the -1 band. I kind of should be long. I mean, at least a little long in case this is the turnaround. And so, like I said, hence A for aggressive, it's below the VWAP. You are anticipating a little bit. The M for medium entry would be if you were going long, kind of like about 11:30 on Jeff's chart here. Just to the right of the letter M, there's I wouldn't say the cleanest pullback, but yeah, a pullback to the VWAP and an attempt to resume the main trend higher, so to speak. We absolutely could have, over the ensuing 30 minutes, developed up towards 39.40, up towards the 1 deviation band, and really ripped into the fast lane. And that would have been our patient entry, where we really are waiting. You know what I mean? We're waiting for as much confirmation as we might need given that we know we're late to the party, but we're doing that purposefully. We're waiting for enough confirmation that it's actually in the fast lane and might set up in a type 2. I know we were initially looking at this closer to 1030 as it rallied up into the underside of VWAP, evaluating that as a type 1 trade short. Just remember that on this chart, there's 1, 2, 3, 4, 5 that I can see. 5 prospective type 1 trades, maybe actually even more now that I look at it. And none of them really develop for the primary trend of the day. This chart that we're glancing at, for the first hour, it spends a lot of time in the fast lane. And for the rest of the day, it spends the majority of the time between the 1 and -1 deviation bands. So a potential, I don't want to say pitfall of type 1 trades are you're buying or selling something that you're not sure if it's even going to develop into a meaningful all-day trade, or if this is just a tactical entry near VWAP, hoping for a move towards the nearest 1 or -1 deviation band. We're taking these entries because this is the train pulling back into the station. Maybe it doesn't do the 3,000-mile long journey we're hoping for. But even if I'm getting aboard something that could be defended and could develop into a bigger trade, I mean, that's the purpose of trying to get aboard close to the VWAP. Obviously, and this is more, what Jeff had talked about with the type 2 trades, you're dealing with something that is natively higher in confirmation because it's in the fast lane. It would not have gotten there by mistake. So you're dealing with something that has already gotten out of the kind of magnetic pull of the VWAP itself and has real directional potential.
Yeah, I agree. Yeah, I mean, also these setups we can talk about. I mean, obviously, there's more than just type ones on this chart. I wanted to make an example of these type ones, but again, like James said right here, this is a valid type 3 consideration right here. So is this essentially coming off this level. Yeah, I mean, I think on a more universally applicable level, I think one of the things to keep in mind with all of the trade types is it's always so important to try and place whatever trade you're taking, no matter what trade type. The trade types exist for a reason. They are very common occurrences that we see based off price interacting with VWAP or the deviation bands. But I don't think anyone should ever take a trade type simply because it's a trade type, if that makes any sense. So you should never just see price coming into the -1 and being like, oh, I'm just going to buy price coming into the -1 because that's a type 3 long. It's really always so important to try and think about what is transpired that day, what is happening on the larger time frame, what kind of a move are you theoretically expecting? Are we in a trending or non-trending environment on both an intraday level, on a long-term level? Like, are we pulling back to key support levels, long-term VWAPs? If you use volume profile like James does, volume nodes, static support and resistance in general, trying to keep in mind where we are in the context of the whole universe and understanding that even the trade types themselves can kind of have different versions of them. So for instance, let's talk about like this type 1 short. This is a type 1 short in which we're coming from the direction of the trade. So we've already explored lower, we're coming back up, and you can theoretically try and enter here with a move down to the downside. But take this right here, for instance. Let me, if I can circle, yeah, I can. So this trade right here, imagine we didn't get this whole morning move. So imagine this is just all completely X'd out. Let's say we had traded higher off of the open and we failed at the +1. We came back here, we consolidated like this around VWAP for a while. Maybe, this break right here below VWAP, this probably would have scared me out of a theoretical type 1 short here because I don't personally like environments in which VWAP is kind of being violated fairly easily. I don't like seeing oscillations around VWAP. I am very much a stickler for clean setups. That's what I gravitate towards. It's what allows me to narrow my risk as much as I do. That's just a personal preference of mine. So on this setup, let's say we had not negated below VWAP here. This didn't exist. This was just all chop and oscillation. We snap down through here. Theoretically, now it's in the way. So this candle actually right here, this breakdown right here, this red candle, that's a type 4. Theoretically, if you want to take a type 4 trade, you're chasing the snap below VWAP with an entry. Probably you don't get in until somewhere down here. You have to risk back above VWAP on the entry. Or you can theoretically wait until we pop up, we retest VWAP for the type 1 short. So in a world in which we've spent all time that we have up here, and I may have more examples coming up in the slide deck that showcase this better. If we've already spent time up here and we failed to live above VWAP, and this is maybe the first snap below VWAP of the entire session, maybe it's midday, maybe it's the end of day, depending on the timing and of which it's happening, which is also a crucial component of this. That's an entirely different trade to consider than this one right here, where we've already lived below VWAP. We're now trying to reclaim it. So if you took VWAP off of your charts completely, and I'm not going to do this because this is a screenshot, so I can't do it, but if you took everything off, imagine this was just a blank chart. If you didn't know what VWAP was, if you didn't know what the -1 deviation band is, any of it, prior day's VWAP, you could make an argument that like, okay, this right down here, this candle, or this whole thing, this flag, whatever you want to call it, the break above, this is the start of a new trend. If you don't know where we are in the context of VWAP, which again, I'm not encouraging you to just remove VWAP from your charts because it provides crucial insight. But if you were to take it all away and just read this chart for what it is, what about this setup right here gives you a whole lot of encouragement that we are going to reject here and just completely fall apart, which should be your primary objective for a type 1 short. Again, unless you're a scalper and all you want is a quick test of this level, maybe a pullback to the half deviation right here, you exit your trade, and it doesn't matter what happens after that because you got what you're looking for. You had tight risk above prior day's VWAP, you capture that little edge right there, and then you're on your way. And you're willing to risk the fact that maybe we hold up like we do here, and we push above and you get stopped out on all or part of the position. So this happens with all the trade types. The only thing that I guess, actually, no, it happens with type 4s as well, because here, like this is a type 4. This is technically a type 4 that was a loser. This is a type 4 that ended up being a solid trade if you took it to the upside. But again, we were already wicking above here. So in hindsight, you can say that, well, this is amazing type 4, but where are you placing your entry? Is it right up here? Is there a certain distance above VWAP that you need to travel for you to consider it valid, etc.? But with all the trade types, there are different versions of them depending on the context of the day that we've seen so far and where we are on the wider time frames. So depending on the size of the move you're looking for, depending on the actual price action of that day so far, that can kind of help contribute to the idea of, does this actually have a reasonable chance of doing what I want it to do? Have we explored below VWAP yet? Because if we haven't, then I would argue that a type 1 short has a greater chance of becoming a real aggressive concerted move to the downside. So this trade, if we've spent all the time above VWAP instead of below, this trade right here, in my opinion, has a better chance of becoming a break into the fast lane to the downside. And this is kind of your, maybe you take a starter entry here with the expectation that you'll add on an eventual break of the fast lane, or into the fast lane, I should say, and then you move your risk on the entire aggregate position, whatever your average is, to above the -1 now. So you need to kind of be mindful of what has the chart been doing that day? Have we already explored a price area and fervently rejected it or supported it, whatever it happens to be? Which is why I would have been more turned off by taking a type 1 short here, for instance, because I already know that we live below here. And until, for my personal style of trading, until we've negated back below the -1 and lost this area, this is the most likely outcome, which is just chop back and forth. That doesn't mean we can't immediately fall apart, but for me, I don't personally find it worth putting the risk on at that level when I know that there's an already really strong support level that we're likely to experience right here based off the fact that we already reclaimed it and pushed off of it over here. But if you're a type 1 short trader that all you want is entry, risk, target, sure, there's nothing wrong with that. It's just you need to be aware of that when you plan for how you're going to exit the trade, how you're going to manage the trade, which means you should never take this entry with this risk. And then we get this move to the -1 and you just sit there and you're like, yeah, but the break into the fast lane's coming. It's going to fall apart before I know it. And I want my full position exposed, because what's most likely going to happen, doesn't mean it's always going to happen, but most likely is going to happen, is you're going to get this move, which is the move all the way back up to VWAP. And theoretically, if you kept your stop right here, yeah, if you would have held it out, this would have worked out for you. You would have eventually gotten across into the fast lane, but you would have been sweating it out on a full position when we got back up here. And you never know if you would have panicked out and said, you know what, I can't let this winner become a loser. I'm just going to exit right here, and then we're going to move back down lower. So if you're taking partial profits into this push right here, keeping pour part of that position on to say, okay, like I realize that my target one is hit. I don't know what's going to happen now, but as long as we keep below VWAP, I'm going to hold on to the remainder. I've locked in realized profits on whatever part of that position it was, and I'm looking for the bigger move into the fast lane, ideally for a low a day test. That becomes the next logical target on a -1 break. Or if there's multi-time frame resistance, anchored VWAPs, whatever down here, then that factors into it as well. So the same thing goes.
Oh, yeah,
Sorry,
I was going to chime in, but
someone's going
I
to say
thought you
something.
were. Go ahead, wrap up
Yeah,
your
go
thought.
ahead. Yeah, I was gonna, yeah, just so the type three, it is same thing. We have two examples of two different type threes in this chart. This is a type three where all we've done is live in the fast lane. Since the open, 930 right here, this is the open. So we opened up in the fast lane, we rejected the -1 of the prior day's VWAP, we rejected it again. We have shown no signs of buying support until we break out of this consolidation, we reclaim the -1, which we have not been able to do since before actual volume became a factor. This is an ES chart, this is all overnight. So we've now proven, okay, we can live above the -1. If you have some level of a bounce thesis, you do what James does a lot, which is you can theoretically enter on maybe a break above this flag. You could theoretically enter here with a risk below -1. You might get wicked out right there, which is the unfortunate reality of this trade type. But if you wait right there and you enter, so this becomes your new risk area. So this is the same thing as this type 1 short, but in reverse. We have only explored downside. Now there's a chance to explore upside. Realistically, you can tell yourself, logically, not just making up stories, okay, we're now accepting a higher level of support. Next stop is VWAP. We're going to encounter some resistance there. But if we can get up through VWAP, next stop is the +1 deviation band. So you can take partial profits here, take partial profits here, hoping that we get to move into the fast lane, but that's not necessarily likely to come. That's the thing that remember with all the primary trade types too is depending on which trade type you're taking, there's logically VWAP levels in your way. If you're taking a type 3 long right off of here, you know that to get the best case outcome, which is fast lane extension to the upside, the longest trade possible, you have to get through VWAP, and you have to get through the +1 deviation band, and in this case, you have to get through the prior day's VWAP. If you're taking a type 1 long, you know you have to get through the +1 in order to get to the fast lane. Same thing for a type 1 short, same thing for a type 3 short to the downside. Type 2s are the only trade in which there is not a VWAP level, unless there's a multi-day level down there, prior day's VWAP, whatever happens to be. There's not a multi-day VWAP support level intraday, I should say. A support or resistance VWAP based level that is in your path of progress, I should say, which is one of the reasons that I like them so much, is because I'm trying to position myself in a place in which the obstacles in my path are limited if I'm looking for the biggest possible price
Note
expansion that I can find.
that T3 is also first contact, basically first hold of -1 deviation. And when I'm looking at the VWAP and +1 above me, I don't necessarily take those as things in my way. I think I take those as identifiable targets. I know I can risk below and have clear, concise targets where I know for sure price is going to pause, right? So I manage my size and my risk around that. I would risk, maybe the wick of that low or the previous low, like I said, and take a share size that where the R return on the break above VWAP and possibly the push to +1 would obviously outweigh the downside risk. But I like having identifiable targets where I know I need to take profit here. So I'm not just sitting in a trade going, okay, I'm going to let it work a little bit longer, a little bit longer. I like having those benchmarks where I can go, okay, I've got to pit stop A. Now I'm at B. Now we'll see if we get to C, et cetera, et cetera. So.
Yeah, I completely agree with that too. Yeah, and that's another way to look at it is those are also very clearly defined targets on a potential trade. So yeah, I mean it goes both ways. You can either consider it as that might be where the trade dies, and you need to be comfortable accepting that it might die there and at
Yeah,
least take
that's
partial
totally
profits into
totally
it.
fine. Yeah.
But again, right, but also like, well, yeah, when you take those kind of trades, like let's say a type 3 long right there, it's typically as you have a reason to believe that we might
Right.
see real price expansion. You might see like, it's you're trying to get a better average for participation
Exactly.
in a much larger move versus, yeah, all I think we're gonna just
Right.
gonna run
Right.
right into the VWAP
Yeah, my
and we're just
thesis
gonna
is always
reject.
bigger.
So yeah, I mean
My
it's
thesis
all
is always
context.
bigger
Yeah.
picture, looking for that broad move on the day. But I'm okay, and I have my risk equated, and set up to where if it stops at VWAP, that's okay. I'll still take some profit. It'll be a green trade. It didn't work out full price expansion, but I'm still coming out of the trade green, right? So
Yeah. Yep. Zach, any more thoughts on this
Yeah,
chart, or you
I'll,
want to
I'll
move
keep
on
it
to the
pretty
next one?
brief here. Type 1 and Type 4 trades were not designed to occur frequently, right? And I don't mean frequently like you won't see many of them. I mean, I don't want to see like 3 or 4 Type 1s on the same chart on the same day. That doesn't give me a good vibe, right? For Type 2s or Type 3s, those can occur much more commonly inside of one day's pattern. Something like this, as we've kind of noted, had an early morning directional attitude, and then most of the rest of the day was pretty sideways. There was, testing of the upper structure and the lower structure, but it didn't really pick one or the other or develop in the fast lane on either side. So
Yeah. Yeah, I mean that's we have a lesson in the course already that talks about distinguishing between chop and trend. And to be fair, there can be counter trend environments that are not necessarily chop. If you're trading the extremes of this, let's say you're taking the type 3 short off this touch of the +1, that's a valid trade type. I would personally not look for it because I find this area to be relatively random, and the best case scenario that I could reasonably expect is just a retest of VWAP. That's not a trade type that I look for. But if that's what you are into, if you're looking for reversionary setups off of a counter trend environment, then sure, you can trade that. What you just want to make sure you're always doing is not trying to, you don't want to be caught in this no man's land right in here. It's the eraser I highlighted. You don't want to just be stuck in here and be like, I think we're about to break higher. I got a feeling we're going to break higher based off things that I'm seeing. And now you're entering somewhere in here with a risk back below VWAP, and you're now basically taking an entry at the 0.4, 0.5 positive deviation, risking back below VWAP, risking basically 0.5 deviations with a really realistic potential target of just hitting the +1. That's a 1-to-1 at best risk reward ratio on what I would argue is going to be not even probably a 50% hit rate. You're just going to get wicked out. So using these extremes to try and trade a counter trend environment is one thing. Like this right here, if you're a type 3 long trader, perfectly valid, as long as you acknowledge, hey, I don't really think it's realistic that we're going to reclaim VWAP and rip to the upside because we just tried that right here and that got stuffed immediately at the +1. But if you're entering here, again, like James says, first contact, we're coming in pretty aggressively to the -1, and all you're looking for is the best case scenario is a bounce as close as you can get to VWAP. You're exiting, okay, that might only be a 2 or 3-to-1, maybe at best, risk reward ratio. But if that's a setup you look for and you like it, and you can acknowledge the fact that the -1 is likely to experience at least short term support there, there's nothing objectively wrong with that. You just need to be aware of how that risk reward ratio factors in to what the long term expectancy of that kind of a trade type would be and how quickly you're supposed to get out and what the price action has
think
told you
about
so
bigger
far
picture,
that
like
day. So,
philosophically, and then we can move on. I know we're running way behind where we thought we'd be. As always, it's okay. Um, you have to acknowledge that there's a difference between a high conviction trade that you see tons of evidence in and kind of a speculative, well, if this occurs, there's a good opportunity I could get in here and not risk that much. All right, I'll give it a shot. And I don't mean, we've all heard, hey, let's see what happens. That's the kind of like famous last words of a trader. They're staying in a trade they probably shouldn't, for example. But something like that, speculative type 3 long we're identifying, your job isn't to know what will happen next. It's to be positioned to benefit from what is probably going to happen next. And if you parse all those words, I'm just trying to participate, not driving the bus. I have no idea
yeah.
where the bus is going. I'm just going to react. Maybe I should say more like a subway. If we get to my stop, I'm going to get off the train. The train's going to keep moving. Train's going to do whatever it wants to do. It's my job to determine if I should be on board or not. So
Yep, 100% agree with that. Yeah, I mean that's why the idea of being able to control your risk as precisely as you possibly can, that's the one variable we can always control. It's at the end of the day, some of this stuff is, we have inclinations based off subjectivity and how much we've seen it happen. We have a general idea of how well something might perform, how many times it might occur, how many times it might fail, etc. But no matter what trade type you get in, you could show me the best possible trade type that fits all my possible criteria, there's still a reasonable probability it's going to be a losing trade. I mean, like it could be, oh man, 80, 90% of the time this is going to work. But there's 20 to 10% chance, whatever is the opposite side of that, that it's not going to work. And if I'm controlling my risk accordingly, then I get stopped out and it's on to the next one. But like, yeah, like Zach said, you don't necessarily know how big the move is going to be. You can just use this framework to participate in very well-defined areas in which we expect reaction from price. And you can do it with very closely defined, in a lot of instances, risk that allow you to participate with high quality risk reward ratios. And if you do get the move in your favor, you need to know how you're supposed to theoretically manage that trade based off of all kinds of factors. We can give you recommendations. We're going to do that on risk management on Thursday. But for the most part, especially handling exit, it's just going to be so subjective because you need to always be debating with yourself, am I okay taking more profits early and risking that I might miss out on the bigger move? Or do I want to roll the dice and participate in the larger move with a larger portion of my shares or my position, whatever it happens to be, and run the risk that I give back a whole lot of paper profits? So, okay, yeah, we've talked about this chart now for 45 minutes. So let's move
Jeff,
on.
before I know
Okay.
we're going to dive into this in just a second. How long do you want to go today? I know we had kind of planned on 2 hours, but we're coming up on 2 hours. Do you want to do type 2 and then pause it there, or what do you think would be best?
I mean, yeah, I mean, I guess it depends. I mean, if you guys want to post in chat real quick, I mean, we could probably go till, I mean, James, I don't know when you have to run. I could go till 4:30. That's pretty much my hard
I
Let,
am
cutoff.
fine.
no,
I don't
it's
know if
totally
Zach,
fine.
you have to
I
cut
just wanted
earlier.
to make sure we weren't getting people to stay for 4 hours as we slog through this. We can break it up
Yeah, no,
and
no, no. That's,
dive
yeah, we're not going
into
to go that long.
type 3 and type 4. Let's plan on that roughly. I'm sure there'll be a couple questions, and if there's anything else from the outline that we want to make sure we covered. So
Yeah, absolutely. Okay. All right. Yeah. So this next setup, again, this is theoretically a type one consideration, but again, we can kind of pick apart other setups here. The main one that I was considering is this right here. So this, highlight it. So this type one short at the end of the day. Clearly, there's another one right here. So I mean, to me personally, this is a chart that I would just be completely hands off of. From a type one short perspective, I would want no parts of this. The fact that we explored aggressively down lower and immediately got ripped back up into VWAP. Yes, in hindsight, we did reject that level and come right back down here and find new lows. There is no part of this in the moment that would make me think this is anything other than chop. I put this chart in here intentionally because I think a very important thing to make sure that we get across is there are going to be setups that you should decide to not take because they don't feel like high quality setups, and you are going to watch them work without you. It is an inevitable part of this process, and you have to try and actively remind yourself that it's all hindsight. Everything works perfectly in hindsight. In the moment, the way that you analyze this stuff is the only thing that actually matters. So to me, this would have been way too chaotic in the moment. We tried to explore fast lane right here off this rejection after, a pretty sloppy type 2 short anyway, found the higher support and just, rip right back up, reject it again. This same one, I wouldn't have been as inclined to take because again, we've lived now below VWAP the entire session. We've moved all the way back up. This is a type 3 long that I think would have more consideration for me if I was looking for a type 3 long than this type 1 short would be. Ideally looking for, we've explored the fast lane all day long. We're finally reclaiming the slow lane. We pull back, we hold the -1 div, looking for that next leg up, the check mark pattern, as some would say, Zach would say.
yep, absolutely. Sorry, I didn't know if that was a lead in you wanted me to comment or not. Looking at I don't get quite as bad a vibe from this, but I do recognize what Jeff is saying. One thing I've always thought about is these are 2-minute candles. How much time do you really have to make that decision up near the VWAP? The second of the two tests that Jeff had identified, so closer to about 1:30 at the bottom of the chart, that rejection, you have a few more minutes to observe and potentially participate. But do you really think we're going much lower than the -1 deviation band? Jeff keeps bringing up context, right? These, I don't even want to call them setups. Patterns isn't quite right. Setups isn't quite right. Trade triggers is too active. Basically, what I'm getting at is philosophically, I don't want people to think that every instance of a type 1, for example, is tradable. Jeff was saying, it's not a good idea to be traded. Some of them aren't even I don't know how to describe it. They're missing some of the core characteristics. And so this is something I mentioned just a few minutes ago when I chimed in. Type 1 and type 4 trades really aren't meant to be commonly occurring on the same chart. There's enough space between the two type 1 short opportunities here that I guess that would, let's say, qualify certainly as a type 1. How?
Oh,
Go ahead.
sorry.
No, go
No,
ahead,
I
Jeff.
thought you were pausing for a
Yeah,
second.
it's fine. It's fine. Go ahead.
It kind of harkens back to what I was talking about earlier. How many boxes can you check in the kind of big picture view on the market outside of just the single name that you're looking at to have the wind at your back with a type 1, whether it be short or long, right? Like for me, I want to check as many boxes as I can to qualify a trade type. Is tick moving my way? Is sentiment in the market bearish or bullish right now? Do we have a major macro event going on? FOMC, CPI, etc. If it's a single name, is this an earnings type play? Is it a gap day? What's the volume? There's so many check boxes that you need to go through first before I even consider taking any of the trade types. The trade type is just kind of I think triggers a good word for it. It's the trigger to say, hey, look, a trade type is setting up. Now I need to check my contextual elements and see if I have all my boxes checked for what I see as a successful type 1 trade most of the time. If I look back on historical events, what were the events happening that day that led to a successful type 1 trade, whether long or short? Was it a trend day? Was there a major outlier event? Was it a high volume day? Was it a gap day, earnings, etc.? And does today, this trade type right now, line up with that, what I've seen in the past, present themselves as successful attempts? That's how I view it.
Yeah, I mean I think that's a valid way to look at it. It's like these are opportunities to participate in what is a broader context play. So like that's kind of harkens back to what I said about don't just ever take the trade types simply because they're the trade types. Try and understand what is the larger story that's happening here. Zach has always been big on kind of harping on that is, we look at lines on a chart and it's data and it's numbers and it's movement back and forth, but it's also a story of supply and demand on a day-to-day basis and trying to understand, okay, what levels have buyers or sellers accepted or rejected. That doesn't mean we can't break those patterns. It doesn't mean we can't have a giant move lower in the morning, come right back up into VWAP, reject it again very sharply, and go right back down to new lows. Sure, that's entirely possible. But imagine the context of this chart, for example, and why I wouldn't be as inclined to take a type 1 short here is we just spent all this time. Let me highlight this again. This is just one giant, I mean, I just bent that a little, but this is just a consolidation channel considering here. It's a flag if you want it to be. You could probably draw a line up here and make it a flag, whatever you want. But if you can define this consolidation channel in the slow lane or fast lane right here, we actually break it. We break below. This is a low a day break right here. And the immediate reaction upon breaking low a day is to get wicked right back up. Strong candle in the opposite direction. We immediately follow through. We break above that last little higher high right there. We reclaim the -1 deviation band after only a little bit of initial resistance right there, coming right back up into VWAP with a full head of steam. Do I expect a reaction at VWAP here? 1000%. This is the first time we've come back to VWAP since, like Zach said earlier, before 1030. There's a pretty strong distance between these two. So if you are a short-term trader, that all you're looking for is the reaction at VWAP, cover a short entry right here, risk back above VWAP, maybe 0.2 deviations on the opposite side, taking the first touch, and you're looking to cover part of your position at a half deviation of the pullback. Ideally, your best case scenario is the -1 test, and maybe you leave the tiniest trailer on for the lotto scenario in which we break right back down and we put in new lows. If that's what you're looking for, great. But that's not what I am as a trader. So if we just try to break low a day and immediately reversed and accepted those higher prices, and buyers took it all the way from new low a days all the way back up to VWAP in a matter of a half hour essentially after we've lived down here all day long, there's nothing about this setup that makes me think we're going to reject aggressively here and go right back to where we came from. And those are the kind of trade types that I'm looking for. So I just want no parts of this. I can acknowledge that I might miss out on what is a pretty solid move. I would, say most of the time is going to be at least 0.3, 0.4 deviations, if not all the way down here like we got. But I don't want to be in a position in which we get this candle right here, let's say, and we kind of stop right here, and we find this higher low on top of like this static support shelf right here. I know I'm making a mess of this chart. But we find that higher support, and now we're coming back up towards VWAP, and we might get the chance to push through. So technically, that's a successful type 1 short if we stop here and go back up. But is that enough meat on the bone for your personal trading style for this to be worth it? And that's always the question to be asking: is what is a reasonable move off of this VWAP level? Is this a part of a bigger push higher? Would I rather participate in the potential pullback for a long trade? Am I a short bias trader right now? But there's nothing about the context of the situation that should make you think immediately, oh man, we're ready to completely fall apart, because we just had the best possible chance to fall apart. Consolidation for 2 hours that we eventually snapped low a days. If the rollover was going to happen after all these -1 deviation band rejections, it was going to be here and immediately got bought back up. So on this way up, this type 2 short that you theoretically could have considered here, because again, we touched the -1 there, and we close this candle down here, that's a type 2 short, but I want no parts of that trade, because the context of what we just experienced is all of these back here, get rid of this stuff. These were all type 2 shorts. This is a decent one. I don't know if I would have been taking these in here, because again, we're holding this lows. I don't really like this consolidation in here. I like the type 2 shorts where we're exploring the fast lane for the first time, and we are doing some sideways consolidation into it, and then we have a reasonable chance of extending lower. I don't like taking type 2 shorts in which we've already proved that demand can hold this floor down here, because then we're just consolidating with higher and higher lows, and I just run the risk of just getting squeezed back up through the -1 and getting stopped out. That's not my kind of setup. So the context, like James was saying, is everything in this. It's understanding, what did we just try and do? What have we already tried to do so far today? What have we tried to do in recent days? Do we keep defending the same multi-day support or resistance level? If that's happening, you need to put yourself in a position in which you're only trying to participate in the trade that fits your overall thesis. And that doesn't mean ignoring this trade type. That just means I would ignore this trade type because it doesn't fit what I'm trying to accomplish. James potentially is a scalper. I know Johnny in the chat room, he was more of a scalper sometimes too. Then like, yeah, you could take this trade. You could be in it for 10 minutes. You could, risk 1R right here, probably make 2 or 3R and call it a day, or move on to the next trade, whatever it happens to be. But those are not the setups that are worth the squeeze for me at this point in my trading career. They may have been a day where I look for that. Could be the day that you look for it now, but just that's kind of the necessary questions to ask when you're considering any setup is, does it meet what I'm personally looking for? And is it reasonable to expect that move given what the current chart has already told me?
Agreed.
Thoughts, anybody?
No, I agree.
All right.
Yeah.
Let's keep it moving. Let's move on to the next one. Unless you, James,
No, I'm
Zach,
good.
thoughts on this one?
I guess
Okay.
I'll tell you what here, leave it for
Cool.
10 more seconds. The first half of this chart, decidedly bearish. Second half of the chart, decidedly bullish. Look at how many bits of little micro evidence. I know you've kind of gone through them over the last couple of minutes. So I don't have to rehash, but clean type 2 shorts in the middle of the day that don't develop into a major new low. That's conspicuous. Then high volume rally back to the -1 deviation band, breaks through it with almost no resistance, stays in the slow lane for a while, builds momentum, crosses above the VWAP, and even makes a nice type 2 long towards the end of the day. If you were building a court case, that would be like, you find one bit of evidence, then a confirming witness, you actually find the murder weapon, oh, there's a second eyewitness, and we've got videotape, right? It's developing and building over the course of the day, where your thesis would have to kind of develop similarly. If you were planning on being short all day, at what point would you admit defeat? The break of the VWAP, presumably, if not that aggressive move from out of the lower fast lane. And so that's just what I kind of pick up on. While you could look at each of these, as I was saying, patterns, triggers, signals, whatever you want to call them, individually in a vacuum, yeah, that might work for a couple bars. But if that is flying in the face of all this grand scale evidence we're beginning to observe from about 1 o'clock onwards on the chart. Yeah, you might be temporarily correct, but as Jeff was saying, if that's not part of what you're trying to do, uh, don't don't try and pick up pennies in front of a steamroller, so to speak. You might be right temporarily, but what good is that if it's
Yep.
15 minutes of profit that you don't capitalize on? And then you may get stuck in a trade that, as it reverses against you, you become emotional about, try and add to the disbelief of no, it can't rip up without some rejection at VWAP again. That kind of thinking. That's what we're hoping to avoid for you guys. So
Yep. Agreed. All right.
The velocity is huge for me. I want to see velocity and speed in a move in the tape and in the orders. I want to see them. I want to see just instant confirmation at VWAP. I want to see them respect VWAP. So,
you see
but
this
we don't have to
giant.
go further on that. But
No. This is a good point, actually. To that point of velocity, do you see at about the peak of this market, so it's close to about noon, Jeff, there's a giant red candle that crosses down below the -+1 deviation band. Yep, right in about there. Um, Notice this is almost like an inverse or mirror image of the chart we just saw. Not quite the same amount of time, not quite the same amount of revert. Like, I get it, it's a little different. But similarly here, at about 11:30, we have a type 2 long, not a type 2 short, as was in the last chart, that progresses to a microscopic new extreme. Maybe it makes a new high in this case, a new low in the prior chart's case, but then quickly is rejected. It is disconfirmed that we ought to be making new highs. So to James's point of wanting to see that intensity, both of these are a good example of like a quick burst of intensity that sets off a big directional shift in the day.
yeah.
Yep. Yeah, I mean, so the reason I included this one, again, if this is WBD, a smaller cap stock. This is, we're trading in the $13 range right here. This is also a little bit of a more illiquid, jumpy stock, as you'll probably be able to notice. I mean, these are 2-minute candles, and some of these are pretty sharp pulls, jumping all over the place. The reason I included this is a couple different trade types in here. But from a type 1 perspective, the most obvious ones to consider are up in here, where we're just kind of, we came off the -1. Technically, that's a type 1 short right there. And you get to move back into the, -1. That's a 2-minute trade, a 4-minute trade, maybe. The bigger picture idea would be this break right here. So we break below, we retest right up in here. You get a little bit of a move, and then you get stopped out on the type 1 short. So this, I put this here intentionally because I think this kind of gives us a chance to talk a little bit about the dangers of anything relatively illiquid. I mean, this clearly, it's not trading with intraday gaps on a 2-minute chart. It is not completely illiquid, but also combined with the fact that there's a whole lot of lack of liquidity in moments. You can see down here, it's pretty dark, but the volume completely drops off in this midday range, coupled with the fact that this is an example of we have explored both price extremes already in the first 2 hours of the day. We come out the open, we pop into the prior day's VWAP, we reject. We go down here, we completely roll over, we oscillate around the -1, we go all the way back up into the +1, we come all the way back down, we refuse to break back down to the fast lane, we go all the way up, we do explore the upside, we get the prior day's VWAP break. Theoretically, this should be the move back up into yesterday's range and back up and through. We fail there, we come back down in. My main point is at this moment, when we're sitting right in here, there is nothing about this that should be attractive. That doesn't mean that we're not going to get this move. And yeah, I guess if you would have shorted right here, of course you would have made money on this down move. But in the moment, if you can imagine, we remove everything from here over to the right, this chart is telling you absolutely nothing about it, what it's trying to do today, what it has already accomplished today, and where it's going to spend the second half of the day. So my overarching point would be like on days like this, on charts like this is the chop that we talk about in the chat room all the time. These are periods of, sure, I guess we could reject VWAP here and we could have spilled over, but also this can happen for no reason at all. We could just reclaim VWAP for 2 minutes and then fail again and snap back down below. So these become the type of environments, in my opinion, in which the +1 and the -1 deviation bands become the only areas in which I care. that I really have any kind of meaningful insight to understand, are we going to try and break higher or lower? So it's an entirely different story if you're, we failed to live below the -1 here, but we also failed to live above prior to VWAP and the +1 here. Finally, coming into the second half of the day, post 1 p.m., we've snapped below the -1. We can't reclaim it. Could this be a valid type 2 short entry, in my opinion? Yeah, I don't think I would trade this because that's not really what I trade. It's liquid, it's a small cap, it's not really in my wheelhouse. But is that in a vacuum a solid type 2 short trade up in my setup, in my opinion? Yeah, it is. Because we have now tried to make a real concerted attempt to live beyond the -1. And I run the risk that I get stopped out. But this tight consolidation gives me the opportunity to do what I talked about early on, which is really clearly and closely define my risk. Where, yes, I run the risk of any pop back above this -1 stopping me out, but we're talking about an entry at, 13.31, let's say realistically right there, 4 cents worth of risk. I size up appropriately, and I'm looking for the big spill into what eventually is a 20-cent move, which is, 7-8 R essentially on my one risk unit. So that is kind of the point of waiting out these choppy environments, because there's also a world in which this just magnetizes around VWAP with a couple of light explorations back into the +1 and prior days VWAP confluence, back into the -1 where we already hold here, and it just runs out the clock on the day, and you just sit there staring at it all day, and maybe you don't even really lose a whole lot of money, but you lose an entire afternoon's worth of opportunity. So I kind of wanted to use this as a larger point of what not to look for in a type 1 short, and also to kind of consider how to identify choppy environments in which a chart is not really telling you in any meaningful way, what it wants to do on that particular day.
I guess the one thing I'd offer, just in quick observation about this, though it's not giving you a clue what it's going to do next around that midpoint of the chart where it falls back to VWAP and doesn't seem to react, the absence of a reaction at VWAP, those weak little pops. I mean, if you're a bull and that's all you get out of a pullback to VWAP, that's a terrible sign. So it may be telling you what it won't do or is unlikely to do going forward, even if it's not going to tell you explicitly what it will. Does that make sense? It lived up in the fast lane above the prior day's VWAP, but then got below it. Oh, it came back to the VWAP, but it didn't bounce, right? There's always some, like the opposite of a silver lining. Do you know what I'm saying? It's like the actual substance of the gray cloud, right? There's always going to be some uh, clue as to what it's unlikely to do next, and you can cross that off your list. It's like in a multiple choice scenario, A, B, or C. If you can eliminate one of the answers, statistically the right thing to do to try to limit the possible paths that your brain has to sort of examine. So if you can say, well, I'm no longer bullish on this, it might chop and go sideways and it might fall much lower, but at least I'm not trying to go long a market that is giving me no confirmation.
Yeah, that's a fair point. Yeah, I guess you could make the argument that like this right here, this little green candle with the bottom wick, that's technically a type 1 long, but same argument. Yeah, there's nothing about this after we've tried repeatedly now to break through the prior day's VWAP and rejected sharply. There's nothing about this that's saying long anymore. So yeah, I mean, I guess from a mental exercise standpoint, if I gave you just this chart and said you have to trade this today, then yeah, that can be an interesting way to look at it. Yeah, my overarching, I guess, argument is there's better fish in the sea. There are better opportunities, and these are the kind of markets that I would encourage people to just ignore. And this can happen in any chart. I mean, this idea of chop where we've explored both extremes and reacted and just come right back to baseline, this average level at VWAP. Those are some of the days where if all you do is trade a single name, if you just trade SPY, you just trade Apple, you just trade Microsoft, whatever, if that's what your chart is doing that day, it doesn't mean you should trade that day. There's going to be days where you're better off just staying hands off. Maybe you make some mental trades, you try and take guesses about what's going to happen next, sharpening yourself for future sessions, but putting risk on in this kind of an environment, there's nothing about this that should make you think that you have any reasonable expectation of what's going to happen next. And that's what you really want to avoid at all times, because that's just kind of wasting what this framework can provide you, which is clearer, more concise rejections or bounces at pretty well defined liquidity levels. James, any thoughts? Or are you cool with me moving on? The next
Yeah,
chart is
no,
much better than this.
mean,
So,
you guys, I couldn't add anything here that's going to be mind blowing. I'm with you guys on everything you said. I agree. So,
all right, cool. Okay, so the next chart, much more liquid. So this is AMD from August 11th. So again, we're on type ones, but we can talk about other trade types as I probably want to on this as well. So the most obvious type one, and arguably the only one, I mean, I guess here we're testing VWAP in the opening 10, 15 minutes of the day, but me personally, I know James is an opening half hour trader. If you are a beginner, listen to this. I would not ever recommend touching anything using VWAP in the opening half hour. It's just less reliable. I know these are clean +1 holds theoretically on this move higher. It's just a trickier environment to try and trade. So the type 1 long that we see here is this immediate test. So this is a big fast lane extension to the upside, a couple percentage points in the first half hour of the day. We fail to stay above the +1 here. We snap back below. We don't get all the way here. We come up, we type 3 short, we come back. Is this a valid consideration as a type 1 long, depending on what you're looking for? So I necessarily would not be as inclined to take this, but I will acknowledge this is more appealing to me as a trend continuation play to the upside than it would be if it was happening an hour later in the day, for instance. This is coming off of a pretty big move to the upside where realistically, I wouldn't expect us to be able to sustain the +1. This is not a move that can really live in the fast lane for a long period of time based off of how aggressively we moved higher. So I've observed over the years that I've been watching using this framework that we will see more extended or deeper pullbacks to VWAP itself, an aggressively upsloping VWAP in this case that's chasing us higher based on the volume that's transacted in the first hour of the day. We can hold here, we can push back up. Typically, we'll experience some resistance at the +1, but we will see scenarios in which we hold this higher low right around here. Let me draw it right around here, and we do eventually get some sideways flagging in this area that eventually breaks back up higher for the next leg. So this is a type 1 long that I personally would be a little bit more inclined to take, but as we've talked about, this becomes your most obvious target one. You do not take this trade, in my opinion, with the expectation that we are going to get the big move to the upside. It's just because this is our first real VWAP test post the opening 10, 15 minutes of the day. And I would almost always typically expect some reaction here. That reaction may be a blip that pops 0.2, 0.3 deviations and then fails. But that is an area to participate on first touch. Again, because if you're waiting for confirmation on this trade type, your entry is already up here and you're running with a pretty terrible risk reward ratio. But if you're entering on first touch with a risk just below VWAP here, looking for +1 as your first exit, if not even before that, that's a decent setup, which then lends itself to if you are looking for downside in AMD on this particular day, you think this is the last hurrah to the upside, we get the +1 bounce. This type 3 short becomes a really interesting opportunity to enter. Once we have proven that we cannot live in the fast lane, we get a chance to try it again. Maybe you do wait for confirmation on this one. We get a test, an immediate red pull. There's the theoretical entry with a risk back above. So those are the two main trade types in this. I know we get some type 2 shorts here earlier. For what it's worth, the record, I am not the biggest fan of taking type 2 shorts like this with the prior days we have so close below us. I would rather be looking for type 2 shorts below the prior days VWAP, or if there is a big enough gap between my entry and PD VWAP that I can expect that to kind of become a pretty logical extension target to the downside. There's just not enough meat on the bone between these two levels or these two levels for me to consider entering here. And also, I wouldn't love the fact that we snapped into the fast lane after initially defending and then gobbled it right back up into the slow lane. At that point, it kind of breaks my general, parameters of looking for clean setups, and I lose some level of interest unless, we get a complete rollover at the end of day. We snap below the prior day's VWAP, and I get a chance to enter somewhere on with the -1 deviation band on the underside of prior day's
Philosophically,
VWAP.
what Jeff
So
is saying there
go ahead.
is he's talking about taking easy setups. That's what he means by clean, right? We don't want to have to do complicated battle with our positions. They ought to work or they don't deserve our attention, right? And now I know we're really focusing for the most part a lot of this call on SPY or ES, for example. I know we're looking at AMD here. The beauty of trading large caps is these patterns show up quite frequently, and there's a lot of different stocks that they might occur on. So you're constantly able to shift towards whatever is the cleanest, simplest way to get your money for the day. And you guys have heard me say that a million times. That's why I personally don't trade more of the momentum names. It's obviously cool that James is a great example of this. You can, and you can with this strategy. It's not like you're precluded from doing that. But yeah, really focusing on whatever's the lowest hanging fruit is probably the right attitude, rather than, hey, this is really risky, but I could quadruple my account. Yeah, it's probably not going to happen, and that that's going to take all your focus and attention when there are other more reliable uh, setups that you could take.
Hello? There we go. Okay, sorry, my coming off mute was weird right there. So, a couple things on this chart specifically. I hate to do it, but I'm going to do it. I'm going to play devil's advocate here, and I'm going to say that with after hours on here, in this specific example, what date is that? 8/11, AMD,
The 11th, yeah, August 11th.
ETH on. Oh, I'm almost there. Give me 1 second here. Give me 1 second. ETH. There we go. August 11th. Go to. Yeah. Yep. So with after hours on, this is an incredible T3. I hate to say it, but it is. And there's a couple things about this chart, right? I love the T2 that happens at 9:45 on this chart. With after hours on, it's a little more clear to see. Now you're not taking right at the bell. You're not taking right at the bell entry, but I'll show it to you here in chat. There we go. But it's a little easier to see right there, right? For myself and my trading style. So that T2 long at 9:45 would be absolutely what I look for in a T2 long, right? And you've heard me reference the phrase house on stilts. And this is a classic example of that. We get an aggressive run up on Jeff's chart that he's showing out of the bell. Longs get over exuberant, and all of the volume is exchanged in the small consolidations between the extension candles. So those extension areas that you see are going to be large areas where price can fall back through fairly quickly. So if you're not fast on this out of the gate and grabbing those T2 longs, this is an amazing T2 short, because once the long traders get stopped out, it's just a straight fall back down. Another thing that I would look at here is something that I pay attention to specifically each day coming into the open, and you'll notice that it's part of my morning prep each morning, is our relationship to previous day's VWAP as we open the day. Is intraday VWAP above it? Is it below it? And if so, or is it, confluent? Are we running right with it? If we're above it, how far above it are we? And all I'm asking in that question is, if we're in a scenario where we're gapping up today or moving up today, how far from yesterday's buyer are we today? And the further we get away from that, the more likely it is that we're going to see yesterday's buyer come back in and start to take a little bit of profit on that trade, because they're deep in the money in profit, right? Specifically on a long trade, and vice versa on a short trade. If we're really extended underneath yesterday's VWAP, I think in some cases I'm going to start looking, if there's a structural support there, I'm going to start looking for some sort of a profit take on the short side, and a reversion style bounce. So relationship to previous days VWAP is something that I pay a huge amount of attention to. And if you're a new trader, I don't suggest, I'm with Zach and Jeff. I do not suggest that you trade that first 30 to 45 minutes. The VWAP is still figuring its average price out for the day. There's a huge amount of volume flooding into the market. You've got orders that are just executing at the beginning of the day, and by 10 a.m., those orders are going to be filled, and there's not going to be a bid there anymore. And that's what looks like happens here. We get a big buy out of the bell, and then all of a sudden they pull the bid, meaning that the buyer is no longer there in the order book, and you see it fade off for the rest of the day, and it becomes a really great opportunity for a short. In this chart specifically, I see both sides of the trade with amazing opportunities. The lower high at 10:30 a.m. Is confirmation after that microscopic T2 that Zach, talked about. The failure to get above high of day right there and hold +1 is an immediate trigger to the short side that I should be looking for failed follow through momentum and a retest from the underside of +1 deviation. I should be looking for that T2 short. That is the trigger that sets me up to start looking for a play at +1 for a short through VWAP, right? Yeah.
James, just to jump in real quick, you said type
I'm
2
sorry.
short there. I just want to
Type 3
clarify. That's a
short. Yeah.
type 3 short
Sorry.
for anyone
I
listening.
said,
But just to add my 2 cents real quick, I completely agree. I think this is a
yeah,
great
sorry.
type
I said
3
that too.
short opportunity. Like I think if we have defended VWAP when we come back up, like I mentioned earlier, if we fail to get back into the fast lane at all, because like you said, we put in high a day, we break below the fast lane briefly, but we pop back up, but we still can't put it in a new high a day. We reject that high a day level and snap right back in. At this point, the idea of like, can we get a very substantive long
Right.
is less likely for me. The reason I consider this type 1 long, like I said, is because this move was so aggressive that I think like, hey, if we're going to get a big move, like I think we're at least going to get some pop here. A retest of the +1 feels likely, if not like maybe 0.6, 0.7 deviations, a decent little scalp at the very least with a chance to break higher. But yeah, right here, as soon as we reject this +1 sharply, and especially this big pull candle, I know it's a little bit of a chase theoretically, but if you think that we have run up a little bit too far too quickly, putting on starter size with a little bit of a chase there, risking back above the +1, hoping to get the break of VWAP and an add, maybe on a type 4. Now your average is somewhere, let's say you enter equal size right here. Sorry. If you enter equal size right here on a bit of a chase and equal size right here, theoretically, your average is going to be right around here. So if your average is right around here and now you're risking back above VWAP or a VWAP reclaim, this is a break-even trade. If you can get a little bit of a starter there, worst case scenario is it defends VWAP again. Maybe you take a little bit of a partial, or it defends even higher and you get stopped out here. But if you have starter size, we're talking about the distance between these 2 points with starter size, which is not that big of a hit, all things considering. But yeah, to James' point, that's what he looks for. He looks for an imbalance on this run up that will likely or at least more likely will be filled to the downside with an aggressive move lower if we can lose VWAP, if we snap below
Yeah,
VWAP.
it's that setup right there is what others call and I call failed follow through momentum to the upside, right? It's a huge move to the upside, higher the better for short sellers, right? The higher this goes, the faster it goes up, the more likelihood that this rocket ship comes back down just as hard. So that huge extension out of the bell right there, those fast lane rips, right, where VWAP never really has a chance to really kind of catch up, and everything just goes straight up, and then all of a sudden you get that lower high, and that's the heads up. Hey, let's look for some sort of a type 3 trade short now, and that subsequent lower high is all hands on deck. Let's go. At worst you get VWAP, right? But on the VWAP flush like that, it's just, I mean, you can feasibly be in this trade for the rest of the day. You know what I mean? No problem. So
Right. Yeah, especially that's the beauty of getting that initial entry if you can get the better
Yeah.
average, which is what you look to do. So again, not
No.
for beginners
No.
necessarily, but that's the consideration of why James looks for that early entry, because if he has reason to suspect if this does start to unravel, it can really unravel. The earlier you can get your foot in the door with a starter position, risking less than you would your normal 1R, like that allows you to build on that if the trade starts to move in your favor, only adding at favorable opportunities.
Yeah, 100%.